policy uncertainty, though, we do think that that still remains somewhat elevated during this process where the Constitutional Court is deciding on the impeachment and before we likely see elections late in the second quarter of this year. The reason why we did keep the outlook on the sovereign rating as stable is because we do expect this to be somewhat short-lived and for the process to continue to be carried out in an orderly and constitutional manner. So our key factors that we'll be looking at are, first of all, around the political situation. Easing of policy gridlock, we think, will be important to sustaining the rating at the current level. It used to be, a strength in Korea's credit profile to have debt lower than the peer median, but that strength has shifted towards a neutral factor.
Why did you set Korea's rating at AA minus this time? I would like to hear the reason for this assessment.
So Korea's rating is underpinned by, relatively strong external finances, steady macroeconomic growth outlook, and very dynamic export sector. And those factors offset geopolitical risk related to North Korea and, some structural challenges that are coming from rapidly aging demographics. So far, our assessment is that this political volatility has not had a material or durable impact on how we view Korean institutions and Korean governance more broadly. There are risks the longer this political crisis persists, but our base case is that these political challenges will remain in line with a constitutional process and not have a long-term detrimental impact. Beyond this, Korea does have external finance as well as public finance buffers to manage some of the short-term political volatility. But we are going to be watching, I think, for signs of continued political gridlock that does start to impact economic policy making or fiscal management, but that's not yet our base case.
Are global investors still concerned about this situation?
When it comes to policy uncertainty, though, we do think that that still remains somewhat elevated during this process where the Constitutional Court is deciding on the impeachment and before we likely see elections late in the second quarter of this year. So that uncertainty does seem to be having a bit of a marginal impact on economic growth outcomes. Not a significant impact, but an impact nonetheless. And also a potential risk is that policy uncertainty remains relatively high in the near term. But the reason why we did keep the outlook on the sovereign rating as stable is because we do expect this to be somewhat short-lived and for the process to continue to be carried out in an orderly and constitutional manner.
Your report said that the base case is that the election will be held in the second quarter of this year. Why did you expect this? And I'm wondering if this expectation does not come true, will it affect rating pressures the next assessment?
This is just our base case based on our assessment of the timelines around the Constitutional Court process and then the likely calling of elections, which would take place within 60 days of that Constitutional Court decision. Of course, if it upholds the impeachment. So, this could slip into the third quarter of this year. A matter of weeks wouldn't change our assessment of the sovereign rating.
This election does not happen. Like, if the Constitutional Court dismisses the impeachment, will it affect the rating like next year or like the next assessment or the upcoming assessment?
That's a very interesting question. I think it would we would have to assess the situation as it comes. There's the potential that that would mean continued political gridlock over the next couple years until the 2027 presidential elections. Certainly could lead to some vigorous debate within Korean politics and society. So we'd have to assess the situation as it develops. But we think that certainly it would make the aspect of easing political gridlock a bit more challenging in the near term.
What would be like the risk of getting like lower
Assessment.
assessment ratings, like lower than AA minus that we got this time?
So when we do our rating reviews, we list a number of factors that could lead to a lower or a negative rating action, either a negative outlook or a lower sovereign rating. So our key factors that we'll be looking at are, first of all, around the political situation. Again, whether this continues to play out as we expect in a democratic and constitutional manner, without a significant rise in political instability, will be quite important. And I think related to that, of course, is the situation around policy gridlock. Korea has some medium-term challenges when it comes to competitiveness issues, aging population, and economic reforms will likely have to be a key part of offsetting some of those challenges. So, easing of policy gridlock, we think, will be important to sustaining the rating at the current level. The other factor that we're looking at is fiscal policy. We have seen a rise in government debt and government deficits over the past several years. Korea is now in line with its peer medians in terms of government debt. It used to be, a strength in Korea's credit profile to have debt lower than the peer median, but that strength has shifted towards a neutral factor. So watching medium-term fiscal policy and the path of government debt will be very important to how we see the rating over the longer run.
Please give me an outlook on Korea's economy this year, as you mentioned, and advise me on what we should do to get a little better next assessment.
We, in this latest review of Korea's sovereign rating, lowered our growth forecast for 2025 to 1.7% from 2% previously. The key drivers of that downward revision are some of the more subdued economic data that we received towards the end of last year, as well as the impact that the political uncertainty seems to be having on consumer confidence as well as business confidence, and our expectation that tariff policy will continue to be ramped up by the new U.S. administration. So 1.7 is our expectation for this year, rising to 2.1% next year. We still think that the Bank of Korea will continue to cut its policy rate this year. We expect 50 basis points in rate cuts over the course of this year. And that should also provide some support by reducing the interest burden for households and help to boost consumption a bit further. Of course, there are challenges still to the Bank of Korea outlook, as the exchange rate has come under pressure due to the broad U.S. dollar strength globally. So that will be a challenge to manage, but we do think that more interest rate cuts are coming in